Welcome to the deep dive.
Great to be here.
Today we're really getting into the Q1 FY26 financial results for D B Corp Ltd, one of India's biggest print media companies.
That's right.
We've looked at their earnings call, the press release, and a whole list of analyst questions. Basically, we want to give you a clear picture of what's driving their performance.
Yeah, and what it means for the media landscape generally.
Exactly. Our mission is to pull out the key nuggets, the important stuff, so you walk away really understanding it. Might even find a few surprises.
Absolutely. And like you said, it's not just about the numbers themselves. It's about digging into the strategy, the challenges they're facing, the innovations in, well, a pretty fast-changing industry.
For sure.
We'll try to connect the big picture with the details that really tell the story.
Okay, let's dive in. First up, the overall financial snapshot. Q1 FY26, ending June 30th, 2025. What are those headline numbers telling us, especially compared to last year?
Okay, so if you just look at the surface numbers, you do see a dip. Total revenue came in at, let's see, 5,872 million, which is reported as a 4.7% decline year on year. That's compared to 6,163 million in Q1 of FY25.
Right. And profit?
Net profit also saw a pretty significant drop. It landed at 808 million. That's down from 11,169 million last year. So yeah, a reported decrease of 31.4%.
Wow. Okay. And EBITDA?
EBITDA followed suit.
Wait.
1,384 million. That's down 27.5% year on year from 1,909 million.
Okay, those are pretty stark declines when you just read them out. But, there's always context, right? What's the story behind those figures?
That's exactly it. Context is crucial here. The company, they specifically highlighted a high base effect. Remember last year, Q1 FY25 had the general election.
Ah, right. Big election spending.
Exactly. That gave a huge kind of one-off boost to advertising revenues back then. So while the reported numbers, they show a dip, we really need to look a bit deeper.
So the big question is, what does it look like when you adjust for that election surge? What's the underlying performance?
Precisely. And this is where it gets quite interesting, actually.
Okay, so let's deconstruct that advertising revenue.
Yeah.
The reported number was 3,978 million, down 7% year on year. But strip away the election noise. What's the real story?
Right. So take out that election effect, and the company stated that on a like-for-like basis, their ad revenue actually grew. And not just grew, but at a high single-digit rate.
High single digit, that's quite different.
It really is. It shows, a real resilience in their brand and that advertisers are sticking with them. It suggests the underlying market dynamics are actually pretty healthy for DB Corp, even with that tough comparison.
That's a fascinating perspective shift. Can you give us a sense of just how big that election impact was and what other ad categories stepped up?
Sure. So back in Q1 FY25, government and political party ads, they were huge 27% of total revenue because of the elections.
27%. Wow.
Yeah. Now this quarter, Q1 FY26, that dropped way down to about 16-17%. That's like a 40% decline in that specific category, bringing it back towards a more normal, 12-14% range.
Okay.
But here's the thing, despite that big drop in government ads, almost all the other categories showed really strong growth. Education was up around 10%, real estate, a big one, up about 27%.
27, okay.
Yeah. Automobile up around 7%, healthcare about 17%, and even jewelry saw roughly 18% growth. So real diversity there, which helps.
So it really does sound like once that election comparison is fully out of the picture, they feel pretty good about growth starting Q2. That covers revenue.
Yeah.
What about costs? That's always key for the bottom line.
Absolutely. And cost management was definitely a bright spot, especially newsprint costs. The average cost actually went down to 47,100 per metric ton in Q1.
Okay.
That's a 1% drop just from the previous quarter, and they expect it to stay pretty soft.
And that helps margins.
Massively. Their print business EBITDA margins expanded by, get this, 800 basis points quarter on quarter.
800 basis points, so an 8 percentage point jump. That's significant.
It really is. Hit 31% margin there. And other operating costs, things like circulation, digital initiatives, they also saw a slight decrease quarter on quarter. Management seems to think they can keep those stable around current levels. So yeah, discipline on the cost side is definitely helping.
Okay, good. Now, even with digital booming, print is still crucial. How did circulation revenue and readership hold up in Q1?
Right. Circulation revenue came in at 1,203 million. That's modest growth, about 1% year on year.
Okay.
But what's quite impressive is that they managed to hold their circulation numbers steady and even grow a bit in some states. And this is during the summer months, which are usually slow for circulation.
How do they manage that?
Well, they had this reader engagement scheme, Jito Sona Chandi, basically a win gold and silver contest.
Clever.
Yeah, seemed to work. Plus, they were pretty aggressive on the ground, with like 550 field executives trying to get back lapsed readers and pull some from competitors.
Oh, interesting. Where are they focusing that growth effort?
Their focus, they said, isn't really the deep rural areas anymore. It's more the semi-urban, sort of tier 4-5 cities, places with populations over 25,000. They see it as this continuous effort, kind of like FMCG companies always engaging the market.
That Jito Sona Chandi scheme.
Yeah.
Did they say if competitors are doing similar things, are others trying to grow the whole print category?
Interestingly, they mentioned competitors aren't really responding with similar big schemes right now, but their management's view is that, all newspapers in India should actually be trying to grow the whole pie, not just fight over existing readers.
That makes sense.
Which kind of leads to the next point. How does this focus on traditional print mesh with their digital side? Because that's really taking off.
Yeah, that's a perfect transition. The digital growth seems huge. How are they doing there, especially with their app?
Oh, this quarter really cemented their position as a major digital player. Their monthly active users, MAUs, they actually crossed 20 million, hit about 22 million in May 2025.
22 million.
From what base? Get this, they were at 2 million MAUs back in January 2020.
Wow, that's incredible growth.
It really is. And they stress these are direct app users, not just, random web traffic pushed from somewhere else. So it suggests a really engaged audience.
And how engaged are they?
Users are spending about 11 minutes per person per day on the app.
Okay. What's driving that success?
They put it down to sort of a three-pronged approach. First, high-quality content. Factual, ground-level reporting. Tons of hyper-local news from like 7,000 contributors doing 15,000 pieces daily.
Impressive scale.
Second, user experience things like mobile native vertical video news. And third, just a strong tech backbone holding it all together.
So with that massive audience, how are they planning to make money from it? You mentioned pay experiments.
Yeah, they are running some pay experiments in certain areas. They said they've seen decent results.
Decent results. Okay, always a bit vague.
Exactly. They did acknowledge India is very price sensitive. So, what does decent actually mean in rupees? And there's that risk, right? If they push too hard on payment now, while they're still focused on growing daily active users, could it backfire?
True, it's a balancing act.
For sure. They don't have a specific timeline for when the digital business will turn profitable. It's still very much in growth and investment mode. So that question of balancing growth versus monetization, that's definitely one they're grappling with.
Okay, moving beyond print and digital, they also have radio, right? 94.3 MYFM. How did that segment do?
Radio showed a pretty steady momentum. Ad revenue was up 1.2% year-on-year, hitting $392 million, and it was up 4% just from the previous quarter.
And the election effect.
Similar story to print.
Oh.
If you take out the election-related government ads from last year, radio also saw high single-digit growth on a like-for-like basis.
Consistent theme there.
It is. And MYFM seems to be doing well critically, too. Picked up a bunch of awards, 8 at the Radio and Music India Audio Summit, 2 golds at the ACEF Global Customer Engagement Awards.
Okay. Any insights on their audience?
Yeah, they did this campaign, Radio Adat High. Radio is a habit based on research. It highlighted how relevant radio still is, especially in tier 2 and third cities. Like 8 out of 10 people there listen, and 70% tune in for 30 minutes to 2 hours daily.
That's more than I might have guessed.
Right. And they're innovating, too. Launched something called Comedy Punchayat, apparently India's first on-air stand-up comedy show with big-name comedians.
Interesting. Okay, so it definitely sounds like they're adapting and trying new things across print, digital, and radio. Looking ahead then, what's the management's overall feeling? What's the strategy for the rest of this fiscal year and beyond?
Management sounds very optimistic. They see a positive economic environment, especially for consumption in those tier 2 and beyond markets they focus on.
What's driving that optimism?
They point to potential tailwinds like government moves on income tax rationalization, maybe softening interest rates, and the expected rollout of the 8th pay commission for government employees. Big potential boosts to spending power.
Makes sense.
So their core commitments are pretty clear. Strengthen their market position, keep building reader loyalty with that high-quality local content, and really push innovation and figure out monetization on the app side.
And shareholder returns.
Yeah. The board declared an interim dividend, €5 per share. That's 50% of face value for this fiscal year, payable by mid-August. It fits their policy of, pretty high dividend payouts.
Okay.
And maybe most telling, the promoters themselves are actively buying more shares. That's usually a strong signal of internal confidence.
Definitely a vote of confidence.
Yeah.
Any hints of totally new directions, acquisitions, maybe finally jumping into the English newspaper game?
No, they were pretty explicit on that. No plans to launch English papers in the metros, and no acquisitions on the radar right now.
Okay.
Seems the focus is very much on growing what they have, especially digital, and making inroads in places like Uttar Pradesh where they see good traction. It's about deepening their current footprint, not really broadening into new segments right now.
Got it. Okay, we've covered the numbers, the strategy, but this deep dive isn't complete without touching on the sort of qualitative stuff. Their editorial approach, community connection, what stood out there?
Right. This is where that hyper-local editorial philosophy they talk about really comes through. They give some powerful examples.
Like, well,
Well, their coverage of the Pahalgam terrorist attack, they apparently set a benchmark for speed and accuracy, reported 26 casualties when others were saying 28, got victim details out a day ahead, and did a 3-day follow-up. Real in-depth stuff.
okay.
For Mother's Day, they got an exclusive article written by India's president, Draupadi Murmu. Apparently a first for a special occasion feature like that, plus a kids painting contest alongside it that got over 32,000 entries.
Wow. Any investigative work?
Oh yeah, sting operations. They uncovered a pretty wild railway transfer fraud. Some loco pilot faked his own transfer papers and somehow got marked as deceased in the system. Yeah. And they exposed a big scam in the Rajasthan government health scheme, the RGHS, which led to suspensions for 119 hospitals. They also blew the whistle on child marriages happening in Pilwara, which resulted in police probes and FIRs being filed.
Those are definitely high-impact stories. But, how does that kind of resource-intensive journalism feed back into the business itself beyond just, say, good PR?
Well, it's a fair question. I mean, directly, maybe hard to quantify immediately, but indirectly, it builds immense brand trust and reader loyalty, right? Which are crucial long-term assets, especially today. You trust the source.
True. Trust is currency.
Exactly. And beyond just the newsroom, they highlighted some big corporate and social campaigns, too. They teamed up with the Times of India back in May for a Print is Proof campaign.
Oh, yeah, I think I saw that, emphasizing credibility.
Right, pushing print's fact-checking strength against all the digital misinformation flying around. Then there was Sitar Zameen Par, Stars on Earth, where they hosted special movie screenings for about 1,400 specially abled kids across 9 cities, promoting inclusion.
Nice initiative.
And their big environmental push, Ek Ped Ek Zindagi, One Tree, One Life, planted over 10,000 saplings, gave out 20,000 jute bags, got the public involved. That campaign actually won an award, 3rd place at the IMA Global Media Awards.
Okay, impressive reach.
Yeah, and one more, Save Birds. Simple campaign encouraging people to put out water and grain for birds in the summer heat. Apparently went viral, over 12 million Instagram views, and they distributed 50,000 of those little earth and water bowls, Sakuras. So yeah, these things clearly show they're invested beyond just the profit numbers. It's about building that community connection, that trust.
Okay, so let's try and wrap this up. Summing up DB Corp's Q1 FY26. It really feels like a story of maybe strategic resilience.
I think that's a good way to put it. Yeah, the headline numbers looked rough because of that election base effect comparison. But when you dig just a little, you see that underlying ad growth, print holdings, steady, and, well, frankly, really impressive digital expansion. What really stands out is how they seem to be adapting and innovating across all their platforms, print, radio, digital. They're not abandoning their traditional strengths, but they're definitely leveraging them while going hard after digital leadership. That whole phygital thing we mentioned seems apt.
And that core focus on hyperlocal, credible content, plus the community engagement, it seems central to their identity.
Absolutely. It feels like that's the glue holding it all together.
Okay, so as we finish this deep dive, here's something to think about. We live in this age of just overwhelming information, right? Media habits are shifting like crazy. How truly critical is that phygital approach, blending the trusted physical feel of print with the instant, personalized reach of digital for media companies trying to build something sustainable and keep readers loyal for the long haul?
That's the multi-billion-dollar question, isn't it?
It really is. Well, thank you for joining us for this in-depth look at DB Corp. We hope this conversation has given you a richer, more informed perspective.
Hope so, too. Thanks for having me.